Good afternoon. For recording purposes, I'd like to state that it is Saturday afternoon, November 1st. For those of you who might be watching the recording, I highly suggest that you write down some of the symbols and the trades that we'll be looking at today and take a look at what the stocks have done since the recording. I think you'll be very impressed. We have had a crazy few weeks here. And I've got to pinch myself. Did we just correct 10% or was that just a dream? This move was unbelievable. And we just fell and we kept falling below major moving averages, the 100-day moving average. Then when we fell below the 100-day moving average and we quickly fell below the 200-day moving average, this is where I knew we were going to run into serious trouble because we had options expiration coming up. We were way outside the Bollinger Bands, which a lot of premium sellers will sell one standard deviation out of the money. Then they have to scramble and cover. That also starts to generate margin calls. I know there was an enormous oil-related sell-off. And sure enough, we fell very quickly. And right in here, I remember posting comments saying that I suspected that we could see a 50-point S&P sell-off that day. We were actually down 62 points. And I did also say to subscribers of the platform that if we're down more than 50 points, sell your puts. The option implied volatility spiked so high that even if you just hung on to the puts and the market flatlined for a couple of days, you were going to lose money because the implied volatilities would start to contract. So if you took advantage of that, boy, you had one more chance the following Thursday, and then since then, we have been off to the races. You can see that the system did pick up the decline. It picked up the rally. We tried a little short in here, but quickly reversed that, and man, we have been on a monster trade there. I currently have one of my symbol groups up, ETF Trader, and SPY is part of that symbol group. This one's really nice because you get the S&P 500, you get the QQQ, and I'll bring that up next. And you can see that we caught that tail price movement here on the decline, but man, did we catch this rally. And relative to the SPY, the system is actually a little bit, the cycles are a little bit longer, and you can see we've only done 20 trades here, but we did catch a really nice long there, and we got short there. System got long here, and I want to talk about this long right here because we changed our rule base this week for entries and exits, and we also added a stop. And let me just talk about how the stops work. So we'll enter a position when it's moving our way the first day, and we'll always use this opening price on the day of the original signal as our stop. And we do price checks 1 hour after the open. So we would not have stopped there. We wouldn't have stopped there. Maybe we stop on this day, depends on how early that sell-off happened. But we probably would have stopped right in here. And if we did, then we would have avoided that part of the decline, which is good because we don't need that extra risk. When I originally put the system together, I wanted to send the alerts out 4 hours before the open so that everybody in the world could see the alerts, they could place the trades, they could go to work, but I knew that buying on the open was not going to be efficient. But I thought that through a series of videos, I could explain to everyone how to get in the trades, how to get out of the trades, how to use something this simple to exit the position. But I decided I need to take it one step further. I need to do the work. I need to figure this out programmatically. And I need to make sure that I'm maintaining my performance. It should be as good as it possibly can be because it's going to impact future subscribers. So now you can expect that if the stock does fall below that original opening price the day of the alert, that we're going to stop out. I'm going to show you another dramatic difference. And we're going to go back to SPY for a minute. And just on QQQ, you can see the system's outperformed buy and hold by about 7%. That includes probably a 4%, 5% decline right in here that we took. Shouldn't have taken that. Maybe a 1% hit we would have taken. So you can add another 4% to that. That is substantial outperformance. And this is in an up market when buy and hold has actually done very, very well. It's our toughest metric. On the SPY, you can see that we're slightly underperforming. And we had major issues right in here, not because of the system, but because of our entry. And I did get a question a few minutes ago, why did I change the time frame? Let me show you exactly why. So we come in and the system says, let's go bullish and let's buy right on the open. So we buy right here on the SPY. If you'd have waited 1 hour, you could see that the market was falling apart the whole day. Stupid entry. Okay, our new rule base would keep us out of that trade because an hour after the open, the position is not profitable and we would not enter it. So the next day you evaluate, oh no, we're still not above that price, so we're not getting in the trade. Well, lo and behold, by day 3, we get a bullish signal. Okay, so we get out, we get a bearish signal right here. So we get out of the bullish trade, we take a 4-point loss on it right here, and we get long, or we get short. And right here, what does the market do? We get short right on the open. It rallies the entire day. And that was probably another close to 3.5, 4-point loss. If we evaluate after an hour, we're not in the trade. We never get in the trade. So we come in the next day. Oh, gee, we're going from short to long. So we lock in that loss. We go long right on the open. What happens? Market sells off the entire day. We lose about another 4 points. Finally, we get a legitimate signal here where we're short and the market's moving our way after the first hour. We're going to take that short and we're going to ride that. We're going to get long here because it is up from the opening price, and then we're off to the races. This short probably would not have taken. Let's say that we do. We would have stopped out there for sure anyway, but we might not have taken that because the market finished higher than the open. So it's just a matter of where it was. After an hour, if the stock were, or the SPY were below the open, we would have taken that short, but we would have stopped out the next day. This little fiasco had nothing to do with the system. It had everything to do with our entry price. And so it was easily 6 or 7% that we could have added back to our performance. But we've since more than made up for that. So let's take a look at a couple of the other symbols in this group. Gold. We have been absolutely killing it on gold. Our percentage gain is 29% versus minus 11% for buy and hold. Look at this short. And that's the beauty of the system, is that out of nowhere, we get short right here when it looks like gold is ready to take off. Just as far as charting and looking at it visibly, there's nothing to tell me that this thing is going to roll over, but man, did it ever. So we've got a huge winner, up about $7.50 on that. These options have gone up probably close to 200% if you're trading front month at the monies. TLT is the final symbol in this group. We've got an awesome buy right here. We get out, take profits, actually get short there for 2 days, but we get right back on the long, and then we had that huge spike higher. This would have been a really nice sale too. This was all short covering on the US bonds because the bonds spiked on the Ebola scare, and the next day our system gets short, and has that been a fantastic short for us. So I'm only going to be promotional for another minute here because I do have a special offer on this particular system, and it's normally $249.95. You can sign up today for $199.95, and I'm also going to include the platform which I'm using right now for 90 days. So for 90 days, you get the platform that's like an extra $60. So this is a really good deal. You can see how well the system has performed. Now I'm going to go back to the platform. I'm going to show you one more thing on this TLT, and that is that we are outperforming, but we would have outperformed much better. Here's another example where the system was on the wrong side of the trade and it didn't adjust. So we needed to have some kind of stop in there. Well, as soon as it got above that opening price right there, which would have been right here, we're out. We're done. We're going to wait on that, and we're not going to re-enter it unless we're on that same sell signal and the TLT can drop below that horizontal cross line there. It never does, so we would never re-enter that short. So that's what the new rule base is going to do. Every price evaluation is going to take place 1 hour after the open. So new entries, new exits, stops, re-entry after a stop, everything happens 1 hour after the open. So I think that the performance is going to be much, much better. The other nice thing is that when you start looking at some of the different symbol lists and you go through and you look at the systems, maybe we can go in and take a look at, say, high flyers, for instance. You're not going to have winners and losers. You're just going to have the trades that are profitable, or we're going to be stopping out. So Netflix, for instance, look at that entry. Netflix has just been an unbelievable stock for us. We buy it here, we make 50 points on that rally. We short it here, we make 40 points on that decline right there. Incidentally, we happen to be on the right side of the earnings call, but we don't trade earnings. We exit before earnings, and whoosh, it fell 100 points. Well, we're right back in it on a buy here, and now we're up 33 points. So if you're going to pick a symbol to trade with the system right now, it doesn't get any better than Netflix. Las Vegas Sands, you can see we've done well on too. We're up 35% versus minus 11% for buy and hold. Here's a stop example. So we get short in here, and we stop out on the trade right there. So, and in this particular instance, the stock opened below our entry price, and it kind of sat there for the first hour, so we stayed in the trade there. But as soon as we come in the next day, we're obviously above our short price, so we're out. And that's probably a good thing. If LVS continues to run, we don't care. We'll wait for the next signal, or we'll wait for it to roll over and then come back below that point. I'm going to take a quick look at, we'll take a look at the Dow. And I want to show you that for subscribers who have access to all symbol groups, they can come in and they can create a list. Now, I created Dow and I provide that for everyone. I also created 10 SPY lists. They're all alphabetical in groups of about 50, so they're easier to view. We'll take a look at a few of them. But you come in and you can click create, and a pop-up window will come up. You name it. Then you can go in and pick the symbols that you want to watch. Click OK. I'm going to click cancel, and then it'll appear right here in the symbol list the next time. The reason this is so nice to use is, I'll just use the Dow as an example. Stocks that are on a buy or a sell will appear in the list, so you can constantly see the activity. Oh, here's some that we just got out of, and here's some that we got into. Well, we didn't get into any new trades on Friday, but if they had appeared, you would see them there. And so let me actually go in and find some new trades so that you can see what they look like. Didn't have, you know what, we're not gonna, I think that on the weekends we don't see the new entry. We do see the exits, but not the new entry. We'd have to be looking on a Monday, and then we would see those. I can try one more, but I think that's what's happening here. But in any case, new trades are listed at the top, and they have a gold background. Trades that we've exited are at the bottom, and they have a blue background. Trades that we've held overnight have this gray background. And in the upper pane, you can just open it up and you can see all the entry dates and prices for all of the trades. So again, there's just that little box in the upper corner of this pane. And we can click through a couple of these just to take a look at a few stocks. Let's see if we can find anything that looks good. Now, this is a nice entry and I like that. Okay, but if I'm looking for trades, I like that and I like the fact that it's creeping up, but I like it even better once it gets through that horizontal resistance. So here is where I would be on board for that for at least a day trade and possibly staying with it longer. Amazon is in one of our symbol groups. Believe it's in internet. You can see we're up 53% versus minus 14% for buy and hold. And there's an example of where we would have done better having a stop right in there. This is a buy. We wouldn't have actually gotten in that trade right there because the stock moved lower the whole day, but we might have gotten in right up in here. Then we would have been stopped out on the trade and we would have missed some of that downside, but we've still done well in it. We caught a really nice buy right in here after the earnings announcement. American Express, we're up 54% versus 8%. Gorgeous short right there. Again, we probably don't get in on that short right there because the stock rallied and it didn't come back below that price. But here we're definitely in on that trade right here. Nice, nice, nice. And then we're out right there. Look at that beautiful entry. Adobe. You can see how the system is picking up all of these entry points along the way here. Look at that entry right there. After a huge sell-off out of nowhere, it says, yeah, we need to buy this. Boom, off we go. And I can show you exactly the same thing on the sell side. You can even see one in AMAT here. The stock is up near a high. And system says, get short here. We cover it, but then we get short right away again here. And we catch all of that nice move. So we're up about 20% over buy and hold for Applied Materials. I can go through and look at a few more of these, but I think what I'd rather do is why don't I open this up to symbols that you like to follow, and let's take a look at some of those, and maybe we'll find some trades just in doing that. And if you could, try and stay kind of mainstream. Please don't ask me for any micro cap, biotech, thinly traded little stuff. I mean, maybe the system worked phenomenally. Maybe it didn't work well, but let's stay mainstream on most of these. And in the meantime, I will also take a look at some of the scans that we have. So you can just, in the pop-up window that you have in front of you, just type in symbols. I'll come back. I'll look at them. I want to make sure I hit your stocks. And then in the meantime, I'll show you the scanner and I'll show you a neat feature that I just put into it. And because I have a lot of people who aren't familiar with the platform as well, I want to just go through a couple of features on the platform and we'll take a look at those. So one thing that every platform user has access to is the scanner, and in particular, these two searches here under movers, bullish, bearish. So bullish movers, we're going to take a look at, let's take a look at gap up. There are a lot of gap up on Friday. My gosh, S&P's gapped up 20 points. So we'll see what the system has done here. And because this box is marked here, these stocks conform to the scan, but they also are all on a bullish buy signal. Okay, so you can see MELI really took off. PPG. Now we're going to look for something that has recently happened. That was a great scoop right there. Seeing lots of great entry points, but I'm looking for something recent because I want to see if I can find a nice little trade for us. This is a Contra ETF. It's a gold short. Boy, was that a nice breakout. Been long since there. Up 92% versus 49%. Toyota, look at that buy. Okay, here's one that's interesting. SSYS. If it can reach above this horizontal resistance at 120, I think it's worth buying. It's on a buy signal, needs to get through that horizontal resistance level. System has done well on it. We're up 25% versus basically flat. I like this kind of formation here too, where the stock is through that horizontal resistance and it goes all the way back here. So this is support here. Now it becomes resistance and it lines up with this as well. So you can put that down. I like that trade. EMN, Eastman Chemical. I like that because now it's gotten through that horizontal resistance level right there. BITA. I like that because it's gotten through that horizontal resistance. ESS, but I'm going to be looking for something. I've got to scan here and see if I can find something with good options in it. You're seeing a lot of good trades in here, but I need something with some options in it. We may not find it in this gap up list. Let's go to a 5-day high and see if we can just visually, if I can pick something out. Not great, Mohawk. Option liquidity is probably one of the bigger challenges. So we've got to buy here on well point, and we're through that horizontal resistance. I do like that. That's a nice setup. WDC, after earnings, continuing to move higher. Tesoro, let's see. There's one I like. I love that breakout right there on Tesoro. And now we've got another buy signal right here. So I like that one a lot. I would mark TSO down as one that I do like. And you would think gasoline prices are dropping. How can Tesoro possibly do good? They're a refiner. Well, lower input costs. So as oil declines, their input costs decline. So as long as gasoline prices are up relative to oil prices, they're going to do very well. Yeah, look at Goldman Sachs. I like that one. You can put this on the list. Beautiful breakout. You can see we were long a long time ago. Beautiful breakout to a new relative high. I like this. And this is an easy trade too because right there at 188, that's your stop. If the stock falls below 188, you're out. If it keeps climbing, you're golden. So write that symbol down as well. And Dave, yes, you're mentioning that you got in on a nice trade on Goldman Sachs. Yeah, that was nice. Got a couple of symbol requests here. We'll take a look at PBR. Boy, we've done really well on PBR. We're up 103% versus minus 31%. Currently short, but stopped out right in here. So we'll see if we get back in on that short trade. Probably, I'm imagining we will if the stock rolls over, but otherwise this might be one that we want to be out on right now. Caught a very nice short right there. Got long, got short. So we've been able to catch most of this decline. We've actually caught some of the nice rallies too. That was a nice rally. Got short there, covered, and actually went long there. It's a beautiful trade. So pretty active in it. Groupon, GPRN. Not sure about Groupon. GRPN. Haven't looked at that one. This will be interesting. We've done well on it, 37% versus minus 26%. Earnings come out. System says go long. We get in right here around 690. Stock finished at 731. As long as it can hold that 722 level, I like it. So this is one where you get in at 720, well, wherever stock opens, as long as it's above 722, but you got to get out if it breaks back below that. And I'm not a huge fan of stocks like this that are really, really reaching. That's a big move. That is a huge move. So I'd give it a little bit of time. I'd want to make sure that it's going to be able to hold that gain. This is nice. QIWI, 61% versus 27% negative. That's huge outperformance. And this is actually a very nice looking trade. I like that a lot. We've got a double bottom. We have a horizontal breakout through that 31, let's call it 30-50 level. Stock continuing to move higher. So, yeah, Dave, thanks for that one. That's nice. For those of you who are just logging in, there is a pop-up window that you can use. I'm taking symbol requests. Type in a stock that you follow. Let me go in, take a look at it. Maybe we'll find a trading opportunity together. I'd like to, this NXPI I know because, no, it was a different one that we had actually, that I had seen that just really took off. This is a nice trade right here, Bungie. Not great option liquidity, but really good technicals here. Love the breakout. Love the volume. So we're moving higher, and that's your stop at 88.49. So recent signal as well. There's another one. There's another trade that you can mark down. So we've probably got 5 or 6 trades that you can take a look at. I'm just going to type something in and we'll take a look at some of the other resources that you have available on the platform. Because I am using an end of day version, you will not have intraday charts. And the only way you can get real-time quotes in the platform is if you have an interactive brokers account. But you can get intraday charts by clicking this. And so you'll see for American Express, there's the intraday chart provided by Yahoo. And if you clicked on any other stock, that little intraday pop-up would continue to appear. Okay, so that is a way for you to get kind of a snapshot of where the stock is. If you don't want the intraday anymore, just toggle on, toggle off. But you can get daily, weekly, monthly charts. We've got all of that data. You will get intraday charts and real-time streaming quotes if you interface with Interactive Brokers. And for those of you who are Interactive Brokers customers, you can click on Broker API. You can see your portfolio. You can use order entry. And I think our order entry is easier to use than theirs. You know, it's pretty straightforward. Enter the symbol, the option chains come up. I'm not going to do it now because I don't know what I would pull, given that we're on a weekend. But very easy to enter the trade and set your trade default. Spread orders, I feel, are real easy to enter as well. You can also automate the entry and exit using automated trading systems. Now, I had this working well, and I have not tested it recently, so I would say just try it for stock for right now and use a paper trading account. I'm going to be testing it this week, but I want to get it back on track here. So you can choose stock or options, but for right now, let's just say you can use stock. You can choose how many shares you'd like to trade, and you can select a dollar allocation. You can exit manually. You can exit auto. And you can also mark this so you don't have to confirm orders. That means that it's on full auto, and You'll see it go live here. That means if a trade comes out, you're going to be doing exactly this, and it's going to be auto in, auto out without any confirmation on your part. When I do start testing the options part to it, you'll be able to select what month you want to trade. Let's say you want to go 4 months out or 3 months out, in the money, at the money, out of the money, a market price or buy bid, sell ask. Those are the only two choices I have. You can do quantity or dollar amount. So very nice feature, especially if you're busy and you don't always have time to enter the trades. You can use that feature. As far as the analytics within the platform, you have earnings, so you can see exactly what the earnings percent change has been quarter over quarter. I've got this nice feature that I just released. It's called e-reaction. This is really for, it's kind of a day trading tool that I've used. I want to see if the stock has any kind of pattern to it after an earnings announcement. And so you will see the last 4 quarters because we're still building this data. You won't see the 4th quarter here, but this is the most recent one. And so you can see stock gaps, establishes an early high, pulls back, and not seeing anything too dramatic that I would, nothing too glaring that I would trade off of looking at American Express. You can see the revenue growth, earnings per share growth year over year, cash flow, analyst ratings, the stock expert rating, which incidentally, this is where we get our rating from. We have about 60 different variables that we weight for technical strength and for fundamental strength. And if you look at a chart, you'll always be able to see how the technicals and the fundamentals line up. Well, this is based on our proprietary algorithm. And then you'll also see our option liquidity rating. So you'll know right away that, hey, AXP, I can probably get some options done here. It's fairly liquid. Anything above, let's say from a -4 to 0, you could get a 10 lot off, but you're going to have to work between the bid-ask spread. Anything above 0 is pretty good, say up to about 4 or so. Anything above 4 is excellent. Obviously, anything around 8 to 10 is just phenomenal option liquidity. And market view, very important page because you get my market comments before the open each day. You can get a snapshot of what's happening overseas. These are all based on the ETF because we don't have a live futures feed coming into the platform and nobody wants to pay for that. But this will give you a pretty good approximation of what's happening for these underlyings. I used a multiplier and so it's not something you would want to rely on solely, but it's just a nice feature to have. At the bottom here, you'll see all the different groups and sectors. So you can click on a sector, you can sort it so that you see which ones are performing the best. So let's say that you want to do a monthly sort and show me the sector that's doing the best. And let's say you want to look at services. When you open up services, you'll see all the different groups and you can click on, well, we can click on toys and hobbies. There's only one stock in that group. I'm just going to click on a few others, see if I see anything interesting here. So this is auto parts and stores, and you can go back into the chart and you can start taking a look at how these have performed. You'll also notice that this is where you can see where the earnings dates might be. So that's a nice tool to use as well. That's in the market view area. And then here you can see how the stocks in that group have performed after posting earnings, the day after posting earnings. Not, how they've done a week after or a month after. This is how every stock in that group has performed the day after earnings. So there weren't many in the toy and hobby stores, but what had released was up 17% in one day. Let's go into maybe specialty retail. That should have a few more stocks. And you can see where the strength came from. Well, who posted? Oh, gee, we could see that Tractor Supply was the one that's driving this, OUTR as well. What's interesting is you can see the earnings release dates for other stocks that are in that group. And that might spark some interest. So let's say you come in Monday and you go, here's some stocks that are similar. And you can take a look at those retailers and maybe position yourself around earnings. I don't like trading earnings. This is also a nice way to go in and check earnings dates to see if there might be reason to get out of a position before they announce. Max Pain. This shows you the distribution for options. And so in this particular case, the assumption is that every single option expires worthless. Where would those option buyers take the most pain? Well, in this case, it would be at $160 on the November 22 option expiration cycle. And then you can also see that there's been some call buying on the 160 strike recently. So somebody's out there accumulating calls. You can also go to the puts, and you can see in that green color that they're also buying the 160 put. So looks like somebody is positioning themselves around that 160 strike, which is kind of interesting because that's also where the max pain is. And it could be because of a lot of this volume right here. But we've only got 900 puts trading. Option pricing, and let me get into something a little bit more liquid than O'Reilly because it doesn't have fantastic options. We'll go back to maybe American Express and we'll check the same information. Even in American Express, you can see some put buying here. That's on the 85 strike. We'll take a look at the calls. Nothing recently, and this is about a week ago, so nothing too dramatic on the call side. I'm going to go into option pricing, and here you can check your option prices very quickly. This is all end of day data, not real time. You'll see a highlight right around the strike price. So if you want to click on an option, you'll be able to quickly get the deltas, all the Greeks. You'll be able to see what the option implied volatility has done and what the stock volatility has done. Fairly unusual to see option implied volatility below the stock's volatility. But the stock volatility has been super high because of the market, and the option implied volatility has been declining because of the earnings announcement. So options started to get expensive into earnings, and then they fell off after earnings while the stock has remained volatile. And then finally, we'll take a look at option stats. We'll go into the November cycle. You can see everything, change in put call ratio, the put call ratio, the option implied volatilities, the change day to day, and then also the option liquidity ratio. Lots and lots of research in the platform. There's a very cool feature as well, and it is the pre-earnings, and this is based on the current signal that the stock is on from the system. I don't trade earnings, so I don't advise you to go out and buy calls on something that's in the bullish column. But what's nice is that you can see what the expected move is, what the average move is, how many times that move has been exceeded, the recent volatility of the stock, the put call ratio, the group performance. This comes from that little study that I showed you a few minutes ago. Call open interest, ATM implied volatility, option liquidity. And the same is true for the bearish side. So I can see this, if you use this for, well, don't have any pre-earnings bear right now. Mondays are usually a pretty slow day for earnings announcements. These will be stocks that have excellent option liquidity. So the option liquidity has to be above 0. And I'll also show you one other nice feature, and that is the post-earnings bull and bear. We're not seeing anything right now, but these will be stocks where the price of the stock has moved $1 up for bullish or $1 down for bearish or more. And so the pre-earnings bull, let me also mention one thing. If I come in Monday morning, I bring up pre-earnings bull. It's going to show me any company that announces after the close today or before the open tomorrow and has good option liquidity. If I go into the post-earnings bull, it's going to show me stocks that announced yesterday after the close or today before the open and are moving plus or minus $1. Really nice resource. And then you can look for big call volume in the front month, which is 1, big call volume 2 in the back month, and the same for the put size. So you can see where the option activity is unusual by using these two searches. So tons of really good information in the platform. Really easy to take a look at the different systems and the different trade signals as well. So for those of you who are subscribers to a system but not the platform, I hope you'll consider it. You get my market comments as well. And what I've been doing in these crazy markets is I've been posting messages intraday. They pop up right in the middle of the screen. And I try and tell you what's happening in the market and where I see it going. So let me bring up a couple of other symbols and then we'll answer some questions. And let's see, I've got GDX. We don't have any information on GDX. GLW, glowworm, as we used to call it on the floor. We're up 25% versus 18%. And you can see that we were long and then we just recently got short this on Friday. MU. That has been a choppy one. System has not done well with that stock, and quite honestly, it's been all over the place. You can see a lot of volatility in here, and I'm wondering if having the stops in there might have helped the situation. We caught a nice short in there. We got short here, which we would not have taken that short given the new rules because the stock opened on the low and rallied all day, so we would have avoided probably a 2-point loss there. Same deal here, we would not have shorted it there. So probably would have taken that short and we would have taken that long though. So right now Micron is on a buy signal. I'm going to go back to the systems. I'm just going to put up, we can take a look at the US index. I mean, you could see that pretty interesting development here. We're long in everything. And we got out of our long position on IWM on Friday. So let's take a look at that. Woohoo! That's a pretty gutsy call to sell into that huge gap up. But it's what the system's telling us to do. IWM, we've done really well on. We're up 20% versus 3% for buy and hold. That's great for an index. And this also includes the Dow. And the Dow, we're up, say, 17% versus 11%. Nice outperformance. And I know we lost about 5 to 7% right in here. Same issue that we had with the SPY. So we should be up more along the lines of 21% versus 11%. The advantage of using the system with these very, very liquid ETFs is that even if we're just able to keep pace with the index, we can leverage it. We can use options. We can buy in the money call options, in the money put options. And so instead of looking at a 16% return, you could easily be looking at, say, a 80% return annualized using options. And I know based on these symbols right here and what we've done in the last couple of weeks, I know trading all of them, we're up probably in the neighborhood of 200% trading at the money front month calls. I like going in the money personally. I like to get as high a delta as I possibly can. But I know a lot of other people especially after a big sell-off like this, like to trade out of the monies with the expectation that we're going to have a big bounce. So the option strategy is really kind of up to you. And I also do like selling out of the money puts, especially when the volatility is high, and using those proceeds to buy an out of the money call debit spread. So lots of different ways to approach the trade. With that said, I'm going to end the recorded portion of the webinar, but I am going to stick around if you have any questions. For those of you who would like to see the recording, you can either use the platform and click webinar to watch it. Give me about an hour, or you can send an email request if you don't have the platform to info@oneoption.com. So if you'll give me just a moment here, I will get the presentation rendered and saved.